In the high-stakes world of Wall Street, few names stir more controversy and admiration than Bill Ackman. Known for his audacious bets and unyielding confidence, Ackman has repeatedly found himself at the center of financial storms. One of the most dramatic of these involved a billion-dollar bet against Herbalife, a company Ackman labeled a pyramid scheme. This is not just a story of financial maneuvers. It's a tale of ambition, rivalry, and the relentless pursuit of success. Bill Ackman's journey to becoming a titan of Wall Street began humbly. Growing up in a wealthy family, Ackman was exposed to the world of business early on. His grandfather had built a private real estate business in the 1920s, which his father, Larry Ackman, later transformed into a million-dollar enterprise. Bill's entrepreneurial streak was evident from a young age. He ran a car waxing business to earn his own money and exhibited an ambition that some mistook for arrogance. After earning a near-perfect SAT score, Ackman was accepted into Harvard, where he began to carve his path. After graduating, Ackman spent 2 years working for his father's real estate business. However, he yearned to create his own legacy, one that would surpass even his father's achievements. His turning point came when he met Warren Buffett, the legendary investor who had turned Berkshire Hathaway into a colossal entity. Inspired by Buffett's success, Ackman decided to venture into the world of hedge funds, aiming to build his own investment empire. In the early 1990s, the U.S. economy was sluggish, but the hedge fund industry was thriving. Using his $40,000 savings, Ackman made his first significant investment in Alexander's, a struggling real estate investment trust. Recognizing the value of its properties, Ackman bought shares at rock-bottom prices and eventually sold them for a substantial profit. This early success convinced Ackman that he was ready to start his own hedge fund, Gotham Partners, which quickly attracted millions in investments. Ackman's next major move involved the iconic Rockefeller Center. Despite the property's financial struggles and looming bankruptcy, Ackman saw immense potential. Teaming up with business magnate Joseph Steinberg, he bought a significant stake in the company. Although he was ultimately outbid in his takeover attempt, the investment yielded a 39% return, cementing his reputation as a formidable investor. By the late 1990s, Gotham Partners had grown to manage over $500 million in assets. Ackman's aggressive investment style and confidence drew admiration, but also set the stage for his downfall. His investment in Gotham Golf, a real estate group controlling numerous golf courses, turned disastrous as property values plummeted. Instead of cutting his losses, Ackman doubled down, believing the assets were undervalued. This decision backfired, leading to significant losses and investor redemptions. In a desperate bid to save his fund, Ackman invested in Prepaid Legal Services, a controversial multi-level marketing company. When the stock price didn't rise as expected, Ackman publicly touted the company, temporarily boosting its value. However, legal troubles ensued, further eroding investor confidence. To stave off collapse, Ackman struck a deal with Carl Icahn, a notorious corporate raider, selling shares of Hatwood Realty. This agreement would later spark a fierce legal battle and a long-standing feud between the two titans. In 2012, Ackman launched his most audacious bet yet, a $1 billion short position against Herbalife. He accused the company of being a pyramid scheme, exploiting low-income individuals and enriching a few at the top. Ackman's campaign against Herbalife was public and relentless. He presented detailed reports, held press conferences, and lobbied regulators to investigate the company. Herbalife fought back vehemently, denying Ackman's allegations and launching a counter-campaign to restore investor confidence. Just as Ackman's position seemed secure, Dan Loeb, another hedge fund manager and former friend, took a long position in Herbalife, triggering a short squeeze that cost Ackman millions. This betrayal underscored the cutthroat nature of Wall Street, where alliances are fleeting and competition fierce. Enter Carl Icahn, a billionaire investor with a personal vendetta against Ackman. Seizing the opportunity to avenge his earlier legal defeat, Icahn started acquiring Herbalife shares, driving up the stock price. With Icahn's backing, Herbalife's board included prominent figures like the former U.S. Surgeon General, further legitimizing the company. The battle between Ackman and Icahn became one of Wall Street's most infamous feuds, with billions of dollars and reputations at stake. While embroiled in the Herbalife battle, Ackman made another high-stakes investment in Valiant Pharmaceuticals. Believing it to be the next Berkshire Hathaway, Ackman overlooked the company's controversial business practices, including aggressive price hikes and minimal research and development. As regulatory scrutiny increased and the company's dealings with Philidor RX services were exposed, Valiant's stock plummeted, leading to massive losses for Ackman. The failure of Valiant was a humbling experience for Ackman. His losses in Valiant and ongoing struggles with Herbalife eroded investor confidence, leading to significant redemptions from his fund. Ackman's persistence, however, never wavered. He learned from his mistakes and continued to seek out new opportunities, determined to reclaim his status as a top investor. Despite the setbacks and fierce battles, Bill Ackman's story is one of resilience and relentless ambition. His high-profile campaigns have reshaped the way companies operate, and his willingness to take bold risks has both won and lost billions. Ackman's journey serves as a testament to the unpredictable and often brutal world of Wall Street, where fortunes can change overnight, and the only constant is the drive to succeed. As he continues to navigate the financial landscape, Ackman's legacy remains one of audacity, determination, and an unyielding pursuit of greatness. However, his story also serves as a cautionary tale, reminding us that it's essential to balance ambition with moral code and to consider the broader impact of one's actions.